Gather round, folks. Things are heating up in the global economy, and not in a good way. Investors are dumping bonds like they're radioactive, all because the US just got its credit rating downgraded again. Imagine your country's Uber rating dropping from 5 stars to 4. That's how rattled the markets are. The Trump tax bill from 2017 is back in the spotlight, blamed for fueling a mountain of debt. So why the panic? Why are bonds, the safe investment, suddenly out of favor? Let's unravel this financial mess and see what's really going on. Buckle up. Let's break down bonds. They're basically IOUs from governments or companies promising to pay you back with interest. US government bonds, treasuries, have long been the world's financial safety net. When the US gets a credit downgrade, it's like your most reliable friend suddenly acting reckless. This matters to everyone, not just Wall Street. US bonds influence interest rates on mortgages, car loans, and even your pension. If the bedrock of global finance starts to crack, everyone feels it. That's why a US downgrade sends shockwaves everywhere. The world's financial system is built on trust in these bonds. When that trust wobbles, so does everything else. In 2023, Fitch downgraded the US from AAA to AA+, citing rising debt and political dysfunction. It's like watching politicians argue over the bill while the global economy waits. The result? Stock markets shook, the dollar slipped, and US borrowing costs crept up. If the safest borrower looks risky, everyone rethinks their investments. That Fitch downgrade still haunts markets in 2025, fueling a wider bond sell-off. Investors are asking, if US IOUs aren't safe, what is? The uncertainty is spreading. Remember the 2017 Trump tax cuts? They promised growth, but mostly delivered a big drop in government revenue. Less tax income, same spending, hello, bigger deficits. The US national debt ballooned and the tax cuts didn't pay for themselves. Now interest payments on that debt are eating up the federal budget. Investors see the connection. Past policies created today's debt mountain. Fitch noticed too. That's why the downgrade happened. The bill from that party is now due. The world's biggest US bondholders, China and Japan, are getting nervous. They've started quietly reducing their US debt holdings, worried about both America's ability to pay and the value of the dollar. If the dollar weakens, their investments shrink. Other countries are also rethinking where to park their money. If US bonds aren't the safe haven, what is? This global uncertainty is like a game of hot potato. Nobody wants to be left holding risky debt. The US's financial troubles are now everyone's problem. The world is watching and waiting. Investors are de-risking, selling bonds, not just US ones, but everywhere. When big players sell, others follow, pushing bond prices down and yields up. Higher yields mean it's more expensive for everyone to borrow. Some money is fleeing to gold, the classic fear asset. Others are dabbling in cryptocurrencies, hoping for safety outside traditional finance. The bond market's turmoil is reshuffling where global money flows. It's a nervous, volatile time. Rising bond yields mean higher interest rates for everyone. Mortgages, car loans, credit cards. Borrowing gets pricier and businesses may cut back or raise prices. Everyday costs, bread, coffee, streaming, could creep up. Your pension or savings, often invested in bonds, might take a hit. It's a triple whammy: higher borrowing costs, pricier goods and weaker savings. The financial drama on Wall Street lands right on your doorstep. No one is immune. Inflation is back, fueled by rising borrowing costs and a shaky dollar. If the dollar weakens, imports get pricier, so you pay more at the store. Central banks may hike rates to fight inflation, risking a recession. It's a vicious cycle: higher rates, higher prices, and economic uncertainty. Your money buys less, savings erode, and planning ahead feels impossible. Policymakers are stuck between fighting inflation and avoiding a crash. The fallout is real and it hits home. So, is this the end or just another market panic? The global system has survived shocks before. Markets panic, governments step in, things stabilize. But today's debt levels and political dysfunction are unprecedented. The tools to fix crises, like slashing rates, are limited by inflation. This isn't background noise. The choices made now will shape our future. Is this a passing storm or the start of something bigger? No one knows for sure. Stay informed, ask questions, and watch how these shifts affect your finances. Don't tune out. This matters to everyone. We're all passengers on a turbulent flight, hoping someone's got a good map, overreaction, or the real deal. Time will tell.